The weekly chart has seen a good confirmation for some downside for a corrective pullback here for the weekly chart. We have good confirmation from the price action. We see a good confirmation from your MACD, and we do see a good confirmation from your RSI all at the same time. So this should be saying we're heading in that downward direction, but we are testing off of that weekly 20. So we need to get into a few things on the bigger scale on the macro side, but we're also in this video, one video this weekend, we're going to go into those shorter time frames, get you guys those updated weekly expected moves and daily expected moves for early on this week. So let's get into it. So let's really space this out so that we can see it, so that we can talk about it pretty briefly. I just really want to go through the macro side. I think it's not the most complex to really understand here. This is very, very nice. But as it stands, we see that we do have a good confirmation with the price action here. That would be the 9-week moving average is what I really like to pay attention to say, okay, in the short term, the momentum is turning down. And we actually could be going to levels such as where the 50 and 200 are lying, somewhere in this general area with the 50 is what I've always been pointing towards when I really stated that the weekly pullback could be here. But overall, I have a lot of reasons to not trust this at this point. So I'm going to go into those shorter timeframes in a moment and remind us that one thing we haven't done during this entire run up is test that weekly 20, which if you go back to the last big run that we did have off of the lows down here towards October of 2023, we do see that we came up, we retest off that 20. We come up, we retest, violate the 20, retest the 20, almost get to the 20, retest the 20, and then we lose the 20 and things get a little bit worse. This is the first time we're really testing that 20, so I'm not very encouraged to believe that this is going to be a mega crash down like a lot of people out there are shouting from the rooftops. I don't see that in any fashion. I just wanted to put that out there because all I see is if the market wants to pull back and go through a period of time of correctiveness, that's perfectly fine with me, because if this is crossed down and I'm someone who's looking to hold stocks a little bit longer term or take longer term trades, and I'd be looking for the weekly to turn up into positive territory, I do not see this as a major top. As of right now, I am willing to be proven wrong, and we'll go into the shorter time frames to show how we're going to look into this, but we don't see any of these divergences. We're actually at the highest point that this MACD has ever been, and we don't have any kind of divergences up here yet. So I do believe that whatever we're going through right now will subside, even if it wants to correct more down to that 50. But overall, I need to get into those shorter time frames because as we look at the bigger ones, we just see what are we doing right now? We're testing off of the 20 on the weekly scale. So let's bring this down to the daily chart. And if we look at the daily chart, if this were to curl up, first off, let's not get ahead of ourselves. Let's talk about something here, right? We drew this up a while back, right? We drew this whole thing up. And so what we are really paying attention to is when does this level break? Since this level has broken, the bears are in some serious control here, and you're going to have to see potentially this right shoulder that could form as the last ditch effort. As the MACD is by the center line, this would say that this is going to most likely, if we turn this thing to the upside, this would be your last chance to really see the bulls try to make that attempt. That's what we've been saying over the last trading session or so. When we were saying adding those put positions right here, especially if you're short term, would not be the best idea. And then we get that 85% chance for a bounce. But we did have this head and shoulders drawn up. The only problem that I have with it is the way that this has overall formed. The way that we have broken to make a potential right shoulder in the future, right? To get a bounce from here, to break this said neckline, if you will. Well, the way we did it isn't necessarily coinciding with how tops or major tops at that actually form. So we'll go over that a bit. But we do see here that we can connect these dots here. And if we wanted to make that right shoulder, we could potentially see that move up and then roll that move early in December. That would be very, very bad. So we would be looking for what? We're going to be looking at those shorter time frames for the most part for these, but I think you have a good shot that as you've broken that neckline, you can see another move lower, but eventually I think you will see that bounce to give you that left head and actual right shoulder if it is bearish. If you're able to curl up on this MACD, though, I would be careful, because if this move is able to push through that, right, able to push through that, and especially able to break through 685, come back for that little retest, it looks like you're heading to the upside instead. So there's a little bit of the bear side. I think the bears are more so in control here by breaking the previous low, but also at the same time, I have to give the bulls a little bit of hopium here because this is going to be the last ditch effort, right? Throughout this move down, you've heard me say throughout all these bars, pretty much look for the 30-minute rolls if you want to take downside plays, but also look for a bigger bounce because there most likely will be some kind of bigger bounce trap, some kind of move to the upside. And I believe that could be this moment right here or potentially breaking through. Everyone forgets about stock market crash, and we do it straight up at the end of December, going straight into January as the big players take profit. So on the bigger time frames here, you're looking, hey, if the daily can cross up, well, we're looking at that right shoulder. We're looking for a violation to actually head to the upside of the trend between these highs, but also the level of 685. And if we pay attention to those two things very, very critically, then we can understand which way this market is highly probable to go. So let's go into some shorter time frames and talk about a little topic before we get started on those. So as you can see, we generally do see some interesting things going into the end of last week, right? We saw those divergences and stuff like that. We're going to go over all of those. But one thing I wanted to mention here sort of early on in the video is the fact that price action and stuff like that is dynamic. It is always changing. And if that frustrates you, then trading is probably not the thing for you. Dynamic means it is always changing. It is always updating. It is always happening, and something could throw a wrench in it and it could completely change. This is why we talk about things in probabilities. It means an 85% chance for an update. Doesn't mean you have to get an update. Everything is dynamic. That means that you have to be ready to do what? You have to be ready to react to things. That is why we talk about both sides. We talk about both sides and tell you which one that we see as more probable on this channel. But at the same time, we tell you the other side in case it happens. Because what I do as a trader is I don't see something going wrong and then go, oh, okay, that's going wrong, but it's going to catch itself down here. I understand as a trader that I don't know if it is going to bounce here and it could fall through the floor. So what I like to do is react. I like to potentially sell out of positions, and then if it curls back up, get right back into those positions. Being a dynamic trader makes a lot more sense when price action overall is dynamic. Always changing as a trader makes sense when the charts in front of you have the ability to always change. I just wanted to talk about that, and hopefully a few people can understand what I'm putting out there, not holding on to things that are going wrong. If it violates your plan, it violates your plan. What's your reaction? So I just wanted to give that little talk here for a brief moment and then go into these things because weirdly enough, the SPY for the weekly expected move, the implied volatility got bigger. I actually was very impressed by that. So you actually will have a pretty much like an over 15 point move for the SPY, I believe. That's pretty wild. So you do have 674.70 to the upside. You can see that that would coincide directly with if we get a big upward move early on in the week, I would be cautious up in these areas. And we're going to talk about that in a moment. But we do see to the downside, we have 643.36. Now, if you would say bearishness, if we just keep rolling and rolling and rolling, we can keep riding these all the way down. But I think it's due for some kind of bigger bounce to get that right shoulder. And the reason we're actually talking about that right shoulder isn't just for like a pattern, isn't like, oh, we think it has to happen. One, it's a psychological aspect. You just broke a critical level. A lot of people short when those critical levels break. But then two, you actually have signals that suggest the bounce can come. So when this bounce does come, you want to treat it like it can reverse around, right? I don't want to be in something that is against my positions. If I'm positioned to the downside and I see a positive thing happen, I want to react to that. And then I want to say, yeah, I'll just get in when everyone's bullish up in these levels. I'll start taking those positions to the downside if I see a roll coming. That being said, we have daily expected moves for tomorrow, 665.03 to the upside, 653.03 to the downside. Notice that the downside move right here for your daily expected move is outside of your monthly lower expected move. This is a lot of expected moves. If you're new here, it might confuse you a little bit. Try not to get too confused. The monthly expected move is where we are at right now. We are at the lower end. That means that if we create reversal signals here, a lot of people will start to make extremely bearish bets and they will be taken off guard by some kind of bounce to remain in the monthly expected moves because you have a 68% chance to close above this line pretty much by the end of this week. You did get your MACD to curl up here for the 2-hour chart. Does the 2-hour chart have anything that says, hey, I can get a big reversal here? I can actually test this high potentially even break through and reverse the trend around. Does it have that? Technically, yes. Is it the strongest? No. What do I rate this? I mean, I think I have like a 1, 2, 3 system. This would be like this would technically, with the monthly expected move there, it'd be like right in half. It would be pretty much like a 1.5 because you don't have it. Sorry about that. You do not have it on your MACD. And this is a big problem because that means that we have a lot of distance to that center line. So we have to really get going fast here. So you're banking on the RSI getting this right, and that's perfectly fine, right? I've taken trades with the RSI alone, with the signal in the RSI alone, down by a monthly or weekly expected move. I've done it before. What I like to do in those situations is say the more reasons for a trade, right? We talk about this in the full technical analysis course, but the more reasons for a trade, the more willing I am to risk more money behind it. So the fact that there's only an RSI divergence here, I'm not risking a ton of money to some kind of long position, but I am in some sort of long position down at these levels. Why did I end up taking those positions? Because the 30-minute chart. And this information isn't just to talk about what I'm doing, it's to help you understand my thinking process. As of right now, we're in that scenario where we said what? Hey, if you bounce here and you roll before you take back that 5, right? You remember that video back here. Oh, we confirm down. What are you going to do? Well, you're potentially going to the monthly expected move and then watch out for a divergence point. We only made the divergence on the RSI. So what do? We see a big move. It gives it up, right? We come down into the monthly expected move. Everyone goes, man, there's no way the bulls can come back. But what do you create? An actual divergence on your MACD and a big triple divergence across the way. Super significant. This is why I took long positions, and this easily can go wrong. Let me say the bear side for a second, because all that has to happen here is this MACD curls down. You go down to that weekly expected move. It wipes out divergence, and you're continuing the downtrend. That's all that has to happen here for it to go wrong. So if this happens, do you think I am going to react? The answer is yes, I am going to react because what? Charts are dynamic. So I have to be a dynamic trader as well. Now, there are a couple things to watch out for early on in the week. Let's talk about Monday. We already showed off why the 2-hour can see that reversal, right? It has the divergence on the RSI. It's not the strongest, so it's not the thing that I would risk a bunch of money behind. But this 30-minute divergence is telling you that it's probable. Okay, cool. But what can happen early on in the week? Can we make another divergence point so that the MACD here can do it really quickly right in these areas? So there's one more fake out before maybe a boom towards the end of the month? Yeah, you could do that. I mean, if this happened, if we came down to this area, I wouldn't be in long positions anymore, right? But if I saw that react back to the upside and confirm a divergence that close to the center line, yeah, I'm going to be in a position there to target something like 670, 470 by the end of the week. That's just what I would do. That's me personally. Everyone out there has a different kind of trading, but if you like what we're talking about here and you want to learn about these things, we have the Black Friday sale up already right now because Amazon decided to do it early. So I'm doing it early too. You literally can learn everything about how I like to do things. And everything about these weekly ranges, everything about confirmations and things like that. Why divergence is important, and we go in depth into your indicators. You can learn all those things down in the description, the full technical analysis course for $100. That is the Black Friday sale. It won't be here forever, so get it while it lasts. Get learning, because if you're able to learn these things while volatility is high, you might be able to understand why this is a great opportunity. And if that ends up breaking through to this level, hey, you just have a great little bounce kind of trade there. Overall, the 30-minute chart here, the two things I would watch for are the confirmation here. Do we see a big move early on in the week, right? And then we have to back off and we see a higher low. That would be a big deal. Do we see a big move and we make a lower high and we're breaking down, giving us the right shoulder? That's going to be a big deal. And then the other thing is early on Monday, do we break to the downside and then catch some kind of little bear trap down here with a potential double bottom? Those are all things that I would highly, highly suggest paying attention to, keeping in your mind, because you need multiple scenarios in your mind so that you are ready to react, because you need to be a dynamic trader, not some kind of stagnant trader who thinks that every single signal has to get it right. Charts are dynamic. You should be dynamic too. Let's do it a little bit backwards for the Qs, get you guys some of those daily expected moves, those weekly expected moves, as we are below, once again, the monthly expected move. That's a big deal. 608.43 to the upside. We have 571.71 to the downside for your daily expected moves. Let's get those out. 597.13 to the upside. for Monday, and we have 583.01 to the downside. So there's going to be a few things here for the Qs that we need to talk about, and we're going to do them kind of from the 30-minute forward, right? We can do it forward, we can do it backwards. We're that good. All right, let's do these things. So what would be something that we talked about on the SPY that is showing could be something to pay attention to for the Qs? Oh, it'd be a 30-minute cross down here. Now, why would that be? Because if we look at the RSI, we can blatantly see, okay, there's a divergence right here, and what happened? Well, if you connect the dots here, it got more significant, right? We got more significant, so that's a big deal. But one thing that we do notice is if we pull up this MACD, what do we have here? It's not there. So we might want to make that right over here, which would be very, very nice for us. So we might want to make something like this on the 30-minute chart. We might want to see that on the RSI at the same time. This means early on, aka Monday, we can pay attention for possibly a drop into that 580, into that 579 area. And if it is able to make that divergence point and confirm, well, then we could see that upside move for the 2-hour chart. This is something I would heavily pay attention to. Now, if the 30-minute curls down in this area, where is it? Negative territory. So do I want to be in bullish positions when we're curled down in negative territory? No, because this doesn't have to make the divergence. Charts are dynamic. You can push through to that weekly expected move. We can break through that even if we wanted to. This could go too deep, and any kind of relief that you get here most likely is to fail at that point. So what we're talking about is reacting if the divergence comes in this area, okay? That would be based on the 30-minute chart. All right, let's go to the 2-hour though, since we do have forms of critical, like pretty serious divergences down there for the RSI. We don't have to make that, but let's look at the 2-hour. The 2-hour has not confirmed any kind of move to the upside. The 2-hour does not have divergence on your MACD. And if you look at this RSI, it's very, very flat on this RSI. So you do have this single divergence point that's holding for both of these. Pretty much you have multiple point divergence with a flat. That means that we could always go down for that little 30-minute push, but it also means, hey, this doesn't have to be some kind of big reversal. This could just pop up for a bit of time, then create a 2-hour divergence before we're able to jump to the upside. This means that any kind of upside move for the 2-hour, technically your MACD is saying a lower high is more probable, while the RSI is saying you have the chance to turn around. And what would we want to do? Well, we very simply would want to do something like this. We would want to see a break of that level. If you want to get bullish, I think you have to break through this level up here, 614 to 615. You got to break through that level. Then you might even come all the way back to then curl up into positive territory again. And we're talking about an inverse head and shoulders. That's right, a head and shoulders in the opposite direction. So there is a way for the bulls to come back here, and that's why I'm very hesitant about this move so far. The other reason that I'm very hesitant, I will talk about towards the end of this video. But for the time being, the Qs look like the 2-hour can turn to the upside. The RSI is suggesting that can be a reversal. So I wouldn't play around with this if I'm super bearish, especially when everyone's very greedy to the downside right now. But the MACD is suggesting that the bears can, we can see a move here, but it will ultimately fail. So I'd be connecting the dots here, looking for areas that are critical to break and things like that. Maybe something like this would be good to draw up on the charts. Just these two kind of levels for the Qs would be very, very nice. This means if we come up to this level, right, look at the weekly expected move, we break it, and that's not going to be a good thing. But if we're able to crack through that, use it as support, go to the upside, you got yourself a potential head and shoulders. Now you know 2 ways to react to any kind of price action. And if you see either of those, you can be a dynamic trader. Now, I do have a point on the daily chart here for the Qs. So if you want to come back for the end of this video, the very end of this video, I'm going to talk about 2 things that really have me very weary about this move so far and thinking that it's going to keep breaking down. Even though we have broken those lows, we're going to talk about some critical things at the end of this video. Okay, so for now, we're going to get into volatility. As you can see, volatility still has not made a higher point. We are selling off further, much further than the last time we sold off. That one day that looked like down, then we got another day that looked down and broke it. Yeah, we've lost more percentage in this move than this move, and yet we have less volatility. So give me a moment. Sorry about that. So for now, we do see potential divergences here, weirdly enough. You do have divergence here for the daily chart on the RSI. It's very extended across. I just think it's funny to mention. But I think the big thing going into this week is volatility is escalated, okay? So expect those big moves. Expect once the sell button gets hit by one big player, all of it's going to dump down for a bit of time. Once the buy button gets hit for some kind of rally, it's going to rally for a couple of days. It's going to be a solid move, right? It's going to be big sporadic moves left and right. So we need to pay attention to critical things that we see forming in front of us when they say something bigger. When they say something bigger, and what I mean by that is when high volatility is there, you can see big moves in both directions. But there will at some point be a big move in one direction where if you are not a part of it, it can rip you to pieces. And I think that signal is showing in front of us right now for VIX. Now, we'll go into the 30-minute chart and see if the bears have time to potentially get out of a position if these things form on Monday. But we do see the divergence on your MACD. You see triple divergence here on your RSI. And you do have confirmation of that. You have confirmation of that. You have confirmation of that. That is suggesting that volatility is about to curl down on the daily scale. That's not to say volatility can't go up later, but it is suggesting with these signals that there is a probable daily pullback coming for volatility. So just be prepared for that if it takes place. Now, something to watch if that is going to go wrong early on in the week or for that to form to make it even more probable is we talked about the 30-minute coming into this level. It has. We're talking about the MACD being by that center line. It's a little deeper than you would like, but you're looking for potential for that to turn up again. If that's turning up again, obviously the 2-hour is not going to the downside. So you're seeing that next pop in volatility. If you see that divergence, you might be getting that SPY divergence that we talked about towards the beginning of this video. So as of right now, the 2-hour is suggesting that we could get a bigger reversal here. The 2-hour is suggesting we could do something like that, right? But the 30-minute is still in an area where you have to watch it. And if you turn up, you are in escalated volatility. So you do see that you could be caught up in some ripping price action because big volatility means rips to the upside, rips to the downside, all right? So as of right now, if the 30-minute curls up, you would expect another wave of volatility. If you make a divergence, well, then you might want to check on the SPY and see if that divergence is forming early on Monday. These are all things to react to. And the last thing I wanted to talk about in this video was the daily chart for the Qs. There are two major things, I wouldn't even say major, but it's just kind of, it's making me a little bit weary, which is the fact that this is taking so long and it doesn't feel like we're building liquidity for a drop or anything like that. It feels like we're convincing everyone that a big drop is coming, but it never really does, in my opinion. It's very slow and sluggish. I like it. I think it's nice. But the daily chart for the Qs told us something, right? They had this flat. They had no divergence on the MACD. We haven't even made a daily lower high yet. So I need to really see a daily lower high from the Qs or a daily divergence form here for the Qs to really be convinced that this is a top. That is the number one thing. The other thing that I wanted to mention here is we have been sitting in extreme fear. A month ago, we were at a 28. A week ago, we were at a 21. And the previous close, we were at a 6. Now we're sitting at an 11. We're in extreme fear, and people are really suggesting that a crash is going to happen. And it seems like that's getting shouted from the rooftops higher and higher and higher. Every time I look at Twitter, it's more people thinking that a stock market crash is going to happen. It's going to be very sudden. Black swan moments and things like that. I saw people bringing up the JPY and things like that. These things can happen. We could see blowups in bond markets in any country, really, based on what data you look at. You can go, man, there's problems in every single market that you can find. There's problems. But it's, do the big players let it drop? And do the big players use news and things like that to create moments of extreme fear, which where you do see extreme fear, you are more likely to see a bottom than a top. So I do still think it is probable. I will need to see if we create a right shoulder that fails. I will need to see these things because as of right now, as we are in extreme fear, I'm not convinced that that's a great thing with other things included. We are in extreme fear. We are at a reading of 6 in the previous close, below the monthly expected move, with reversal signals in the shorter timeframes that say that the daily is going to curl up here. So pretty much your monthly expected moves, the fear and greed index, these signals right now are saying that there is a high potential bear trap here. And the Qs gave us that hint a long time ago, and we've talked about it for a long time. So that hint that we talked about back in these areas will potentially help us out here in deciding, hey, are we going to see the next upward move? And maybe while everyone is shouting from the rooftop bearish things, we need to pay attention to the next bounce very critically and not soak up all of this social media that's going on out there. I really wanted to say that. So, hey, overall though, guys, I wanted to say a big thank you for watching the video. I don't have time to go into much else. I just wanted to make sure to get out these levels to you guys and get a lot of the type of moves that we could see going into this week. Really talk about those this weekend because I think it'll really, really help you out. Thank you guys so much. And if you want to learn more, about these monthly moves, why it is highly likely to bounce from below that yellow line, you can take the $100 course. It's only $100 right now for the full technical analysis course. That is our Black Friday sale. So it's happening throughout the whole month of November. We might push it on a little bit more, but get it while it lasts. Thank you guys so much. Have a great rest of your day. Peace out.